Hey guys, back again. Look, as usual, we'll start with the dollar. Yeah, let's get the chart up. So, again, Fed wants to maintain rates between 4.25 and 4.5. Powell's neutral tone pretty much aligned with market expectations there. So, there were some softening numbers that came out, and the USD did weaken a little bit there, but yeah, all pretty much priced in already. Again, his neutral tone, well within expectation for the market. And just back to Trump's tariffs and potential other potential policies, the market is still quite wary of that, and that could also, see we can see the US dollar rally a little bit more with more with more Trump comments, right? But that aside, we'll take a look at the technicals. I've got the chart for you guys. So if the DXY stays above 108, I've got here key level. We might maintain more bullish sentiment. The momentum indicators that I've got on here, they are providing mixed signals, right? So RSI is below 50, right? It's at 47.3, suggesting a little bit of limited bullish strength. My MACD here is showing ongoing selling pressure. So again, if it holds above 108, we may see a touch 108.50. That's November 23rd high, right? And 108.54, that's the 20-day moving average. A break above 109 is possible, and 109 is a very, very key level to look out for there. That's it for the dollar, really. Moving on. Okay, and we'll move on to gold. Look, we printed new record highs. We are fast approaching the 2,800 level. Big level there. Lots of uncertainty again with tariffs and just global instability regarding the Middle East and Russia and Ukraine. This uncertainty has obviously supported these gold prices and even led to a rally in printing new highs. So currently, it's doing what it always does, always has been, a safe haven, particularly now. It's a safe haven for a lot of key players. So there is a lot of bullish sentiment, just even looking at the chart here, right? So we've got key resistance around 2780 that we've just broken. And again, we are at 27.95 right now. Very close, about $5 off to hitting that 2,800 level. So we've got some immediate support at 27.45 and 27.45.60. That's the 10-day moving average that I've got on there. Further downside targets, look, we've got 2,700, just a nice psychological level there. But it is bullish, so if you are shorting, short with caution. And for all the longs, and regardless of what position you're in, just be aware of those key levels that we've got there. Alrighty, let's take a look at the Aussie. Let's get the chart up there. So look, we are in a bit of a neutral range. Traded near 6,200 on Thursday. Didn't have much momentum after the release of fourth quarter inflation data. The Fed, they kept rates stable, but they're still cautious, right? I mean, we heard Powell's comments, so we still have that US dollar strength there. Look, the RBA is shifting to a more dovish stance, right, which is very bearish for the Australian dollar. And after the release of the export price index, we did get a little bit of support there. That being said, look, it is bearish, especially with the rate cuts that we've got coming up, or the implied rate cuts. Look, RSI is below 50 as well. I've got on here the 14-day RSI, further reinforcing that bearish outlook. We've got immediate support at 6,200 and 61.64. And we got some resistance at 62.82. That's the 45-day moving average, and then 6,300. That's a psychological level there. So a rebound above those levels could indicate some bullish momentum there for the Aussie, but a lot of weakness with this particular pair. That being said, thank you guys again for watching, and we'll be back next week with some more analysis for you.